All right. Well, welcome everybody to another Monday night webinar. My name is Ben Jackson, and tonight we're going to be talking about mastering your debt repayment plan if you choose to go the debt management or debt repayment route instead of the bankruptcy route. For those who don't know me, I'm one of the co-founders of Upsolve, and I am so excited that you're here because it means that you're taking action to do something really scary, which is get rid of the debt that might be holding you back. So if you are tuning in, chances are you're probably looking for some clarity around your debt, or maybe you're trying to help somebody figure out how to handle theirs. And if that's the case, you're absolutely in the right place. And I can tell you that from experience because I know how overwhelming debt can feel. As I mentioned before, like I had a business that failed about 8 years ago. I was in $60,000 of credit card debt and I was only making $20,000 a year driving for Uber and Lyft. And it honestly felt impossible to ever get ahead. But through that education and support that I found, I got a way out through Chapter 7 bankruptcy. And that's why I host sessions like this. And it's also why I co-founded Upsolve, because I wanted to give you the tools and the confidence that you need to take control of your financial journey, which is why I'm so excited to introduce tonight's guest host, Henry Williamson. Henry is the counseling manager at Cambridge Credit Counseling. Those of you who saw our webinar a few weeks back with Gordon, also from Cambridge, probably already know who Cambridge is. They're a nonprofit credit counseling agency that helps people get out of debt and rebuild their financial futures. Henry has over 25 years of experience, which is crazy. And actually, he just told me right before this call that he celebrated his 25th anniversary 4 weeks back. So, Henry, congrats for 25 years of awesome service. That's amazing.
Thank you, Ben.
Yeah, I hear tell Henry and I just met, but I hear, Henry, you've spent pretty much your entire career working on these problems of helping people get out of debt and move forward with their lives. So I'm curious, why do you do this work?
It's really the benefit of helping a lot of people.
Hmm.
Uh, the stress that's involved in dealing with their debt, knowing that there's a solution.
Hmm.
And really, at the end of the day, sometimes we can't help everybody, but we can provide as
Sure.
many resources as possible
Hmm.
that can help them. And it feels good at the end of the day that, I'm really trying to help someone change their lives for the better, try to release some stress.
Yeah. Do you have a personal connection to this work? I know a lot of people that do often, experience debt and financial challenges themselves or had family that did.
I do. Yeah, I have some friends that have dealt with credit card debt. I mean, I've had
Hmm.
credit card debt as well. But yeah, I've seen the benefit that a DMP, if it's right for them, the benefit and what really helps them move forward in their lives
Okay.
in a much quicker time frame as well.
So you dropped a word there, an acronym, and in the debt relief space, I feel like acronyms are everywhere. So I'm going to ask you to define it. You said DMP. What is a
hmm
DMP?
Sure, it's a stands for a debt management plan. So basically, we have a relationship with all of the banks
Hmm.
where they allow us to consolidate the credit cards into one payment, where they'll lower the payments, lower the interest rates, create a payment plan, and usually paid off within a 3 to 5 year time frame.
Okay, got it. Got it. And who do you typically see as being like the right candidate for a DMP? We've mentioned on this show before things like settlement or Chapter 7 bankruptcy, which is Upsolve
hmm
helps with. Who's the right fit or the average fit from what you see for a debt management plan?
Sure, a consumer that has high credit card balances,
Okay.
high interest rates, steady income is going to be needed, or if they have the ability to, make that payment every month.
Okay.
Yeah.
Got it. Cool. Well, I pulled you into the weeds first. So, just to give
hmm
people an overview of what we're going to talk about, a quick look at what we're going to talk about today, how a debt management plan can help lower your monthly interest rates and therefore your monthly payments, how to
hmm
know whether a DMP, bankruptcy, or debt settlement is the right option for you, which Henry just previewed there, what you should expect when you're enrolling in a debt management plan. And then the most common mistakes people make when they're trying to tackle debt on their own, when they're in a debt management plan. And as always, we're live. So if you have questions, drop them in the chat. I do have some questions already submitted from users beforehand that we'll cover. And this webinar will be recorded and hosted on our channel going forward from there. So let's get into it. Okay. Henry, walk me through what your average day looks like as a credit counselor. Are you just sitting in an office waiting for people to walk in the door? Are they calling you? How do people get connected with you for help in the first place?
Sure. At my desk, primarily, majority of the day, and it's all
Busy man.
consumers that are
Yeah.
calling in.
Okay.
calling in looking for some type of assistance. Sometimes it's just advice,
Okay.
trying to decide what their best option is.
How do they find your phone number? Is it just something you advertise on Google?
Yeah,
Okay.
Google, YouTube. They may, if they know of, they'll look up debt management plans. We're actually
Mhm.
considered one of the highest rated agencies
Oh,
as
cool.
well. So yeah, so we come up quite a bit.
Okay. Got it. So if I was a consumer struggling with debt and I called you, what's the first thing you would do with me?
Really try to take some time and understand their situation.
Okay.
What had caused them to make the call, because that's really
Mhm.
tough too. To
Sure.
make that first step, that they're reaching out to somebody that they don't know.
Mm.
So to reach out to us, so again, I'm trying to get an understanding of why they're here, what are they trying to get help with, and if it's unsecured debt, which is we help with
Mhm.
credit cards,
Okay.
some unsecured loans, old debt, medical debt, that's that sort of thing. So we'll
Mhm.
talk about their situation and see what if this could be an option for them,
Okay.
or what
So,
the best option is, I should say. Sorry.
no, no worries at all. So obviously people have all sorts of different types of debt. You mentioned there's some types, as you said, unsecured. Can you just for the audience clarify what unsecured is versus secured?
Sure. So unsecured, no type of collateral.
Okay.
So
Got
we
it.
we would handle credit cards,
Hmm.
old medical debt, where they're no longer using the doctor or the
Hmm.
service, collections, some unsecured loans.
Okay, got it. So it's something that's not tied to property, like a car loan or a mortgage wouldn't
Right.
qualify for a debt management plan. It sounds like.
That's correct.
Okay,
Yep.
got it. So what should I do if I'm primarily dealing with a mortgage debt, for example?
You could contact the mortgage lender that you're dealing with,
Okay.
depending on which, they usually may have some workout options for them directly.
Hmm.
They
Okay.
could also call HUD, their local HUD agency,
Hmm.
and deal with a housing organization there. They could
Okay.
help.
So primarily dealing with credit card debt. Let's say I call you. What are you going to do with me next? You now understand what I'm trying to do, trying to get out of
Mhm.
from under this debt, or at least reduce my payments. What's next on this process?
Sure. Next step is going through a budget.
Okay.
That's the
Oh,
first step.
dirty word.
Yeah. And most consumers don't have one.
Sure.
I mean, I remember when I came to this job, I didn't have a budget. Didn't even know what it was at the very start.
Hmm.
But yeah, we go through a budget that lets them see where they're at financially. So if it shows that it's affordable, we'll then pull a credit report,
Mhm.
and it's a soft pull that gets
Okay.
all the bill information. And then what's really great about credit counseling or the DMP is that the benefits are preset. So
Hmm.
we don't have to call the creditors to negotiate. We don't. So
Interesting.
basically, we can tell the consumer in this evaluation,
Yeah.
what the new payment will be and what they're saving in interest prior
How
to
is that
if they want to enroll.
how is that possible? I
Yeah,
mean,
we've
how is
already.
it possible? Yeah.
Yeah, we've worked that out with them
Okay.
already. Yeah.
Got it. So you kind of have relationships with banks or credit card
Mhm.
companies that say like, "Hey, if you can get a person into a budget, this is what we'll accept."
Correct. Yep.
Okay.
Based on their balance, there's a certain percentage
Okay.
they'll allow us to set up a payment for.
Interesting. So there's really no negotiation. It's just like, if you can do
Mm.
this, great, here you go. If not, you can't.
Correct.
Okay. Now, that obviously begs the question, how much does somebody end up paying? Like, let's say I owe, I don't know, $100,000, or we'll go back to my personal scenario. I owe $60,000 on my credit cards.
Hmm.
Am I going to pay $30,000? Is it reducing my balance? Is it just reducing my income? How does this work?
Yeah. So it's not going to reduce any of the debt
Very interesting. Yeah.
per se. If they have credit card debt,
Sure.
they're current or behind, they're not going to reduce the debt. They will lower the rates and the payments.
Okay.
So most consumers can see a payment reduction probably around 25% of what they're normally paying
Got it. And this is
through our program.
25% lower interest, it
Lower.
sounds like.
No,
Okay.
lower payment.
Lower
Lower
total
payment.
payment. Okay.
Yeah,
Gotcha.
yeah,
Gotcha.
yeah.
So my
Yep,
interest payment goes down, and as many people probably know, like much of what you repay on a credit card is your interest, and because of that, I have a 25% lower payment. So if I was paying $100 a month, I might be paying 75 now.
right.
Okay, got
And
it.
and
That's
the
really
interest, and just to add to that,
mhm.
the average interest rate reductions goes down to about 8%,
Okay,
and some will even go as low as 0.
got it. Now, what's considered reasonable for my budget? I know you said you kind of start with a budget and say, "Can you afford this repayment?" Does it go like, I have $1,000 a month in income. and my expenses are $900 a month. Therefore, I have $100 left, and I should be able to enroll, or is it a little bit more complicated than that?
It's as we go through a budget, we're trying to get as
Hmm.
much as the numbers we try to get as accurate as possible.
Okay.
So if at the end of the budget it shows, let's say they owe $10,000,
Hmm.
but the budget they're at a break even, right? There's no money to pay the credit cards,
Sure.
then the DMP may not be the best option.
Okay. Interesting. So let's say
If
that,
yeah.
I'm sorry. Go ahead. Didn't mean to
No,
interrupt
I
you.
was just going to say, unless they felt there was a way that they could make it work, like so,
Okay.
because some consumers, get to a point where they know they don't have enough income,
Yep.
but they're not looking to go the bankruptcy route or the settlement route,
Okay.
but they feel that their situation is going to change.
Okay.
We can still provide them with all the information they want to show
Hmm.
them how the DMP would work, what the payments are, and then from there they can make that decision.
Now, does it matter like how much I'm paying for different things in my budget? Like, let's say I live somewhere that has really expensive housing, right? And your average person you talk to, maybe they're paying $1,200 a month for rent. I live in New York. I'm paying 3,000. Does that affect my eligibility for this at all?
No, it's just a matter of at the end of the day, at the end of the budget, what is left
Mhm.
over.
Okay,
And
got it.
there will be some things, some expenses which are, variable expenses, like if they're eating out, is
Hmm.
that something that can be lowered?
Can be lowered. Okay.
Entertainment, if that's part of the budget, can that be lowered?
Hmm.
So there's certain expenses that they can't lower. You can't lower the rent,
Yeah.
for the most part.
No, I often found when I mean, thinking about my own personal experience and talking to friends, and then also like the thousands of people that we've helped at Upsolve filing bankruptcy, what I often find in talking with people is that there's very little like wiggle room, right? Like you're very rarely like way overspending in something. Your budget's pretty tight. I'm curious if the people that you talk with, if that's also usually the case, or if there is a little bit more wiggle room in this area.
It's different for everybody, but yes, tight.
Yeah.
Yep.
Okay.
Yep.
So what if you hopped on a call with me and I told you I was spending, I don't know, $4,000 a month on takeout? Like what would that conversation sound like? Would you be like, "Come on, man, like this is ridiculous." Like,
I wouldn't say it like that,
yeah,
but I would
sure.
say that's something, if you're trying to change, right? If you're trying to change your financial situation,
Yeah.
and if it's, the reality is if, hey, can you really lower this?
Mhm.
So let's say they're spending 500 a month eating out, but
Mhm.
they're short 500 a month in order to make this program work. That's, they're going to
That's where
have
it's
to
gonna come
say,
from.
you're going to have to sacrifice. Hey, if you
Okay.
can not eat out and make
Mhm.
this work, that's going to change your life.
Okay.
So it's,
Put you on the spot a little bit here. I'm just
yeah.
curious if let's say that I could afford the payment and I'm
Hmm.
spending, $4,000 a month on eating out. We're using a ridiculous amount just to make this
Yep.
as obvious as possible. I'm spending $4,000 a month eating out. Are you gonna have a conversation with me that's like, "Look, you can probably actually afford to pay this credit card debt back, like, maybe a debt management isn't right for you."
Yes.
Okay, interesting.
Yeah.
I respect that. That's awesome.
Yeah.
Have you ever had to have a conversation like that?
We have. Yeah.
Wow.
Yeah. Yeah.
Good for you.
We try to cover everything.
Yeah.
And we try to get as much information as we can,
Mhm.
because if the consumer really can do it on their own, that's always the best route.
Yeah, totally
Right.
agree.
So if they're spending 200 a month on clothing, do you have to do that?
Sure.
So yeah, absolutely.
Okay. No, I love that. And for those that haven't heard me talk about Cambridge before, this is part of the reason that I really like them is because they're really out there to make sure that you're making the best decision possible for you and not just selling you something, which Henry can attest, I'm sure, after 25 years in the industry, there's a lot of just trying to sell you something out there.
Absolutely.
Okay. So I'm going to go through getting a couple questions that have come through here, and then we'll
Okay.
jump back into some process questions. Give me just 1 second here to get these in the chat.
Sure.
Okay. Great question here. So, obviously, Henry doesn't work for free. What are the fees associated with enrolling in a debt management plan?
Sure. There's an app. Well, I'm a salaried employee, so
Okay,
the counselors, we don't get paid on someone enrolling into the program.
great.
So the company itself, we have the average initial fee is around $50,
Okay,
and the average monthly fee is about $30.
okay.
So depending on the debt, and in some states, there's certain state requirements where the initial fee could be a little bit higher.
Hmm.
Same thing with the monthly fee, it could be a little bit higher. I will
Okay,
say though that if the debt management plan is right for the consumer, that their payment with our monthly fee is normally lower than what they're paying on their own.
Great.
So the fees are usually offset, which we show them. We'll put everything in writing as well.
Yeah, that's all. And it's so hard to calculate things like that. So it's really nice to be able to work with an expert that can tell you that.
Yeah.
Okay, so this, I'm going to transfer this question over. This is asking about types of debt. Can medical debt be included in a debt management plan?
It can, certain types. So if they're still attending, they're still seeing that doctor or that physician, we
Mhm.
normally don't recommend it because they're still using the service. But if
Gotcha.
it's something where they're no longer using the service and they just owe the bill, then we can include it and try to set up an affordable payment for them.
Gotcha. Okay. Now, how long do these payment plans usually last? If I started one today and I'm trying to figure out, like, when am I going to be out of debt, which is what I was thinking about when I was struggling with debt. Like, how
hmm
soon is this over with?
It's usually in that 3 to 4 year time frame,
Okay.
primarily with credit card debt.
Got it.
The consumer can also pay more if they want to
Mhm.
speed it up. There's no
Okay.
penalty.
So what's going on with my credit score while I'm in a debt management plan?
Yeah, sure. So typically the score, because the accounts are closed, so any accounts that you put onto the debt management plan, the
Mhm.
banks close those accounts because of the benefits that they're giving them. So
Okay.
their score typically can go down 20 to 40 points. And then usually, as long as they're making the payments on time, they'll
Mhm.
see their score typically go back up to where it started in eight
Mhm.
to 12 months. And then it just
Got it.
continues to get better as they're
So my
moving
score
forward.
becomes related to the debt management plan instead of being related to that specific, like, credit card that I had opened previously.
Correct. Right. Because
Okay.
you have the total debt is being paid down faster.
Okay. So if I look at my credit report while I'm in a debt management plan, like, what am I gonna see on there as the credit line?
It will show that it's closed,
Okay.
but it's still going to show that payments are being made and that the balances are coming down also.
Okay, gotcha. Interesting. Okay. So what would you like if you were having a conversation with me? We'll role play this. We'll go back
Okay.
circa 2016 Ben Jackson, looking younger, slightly more hair, not too much more. And I really was struggling, right? Like, I had $60,000 in debt. I believe at the time I was probably making around 1800 dollars a month in payments, barely scraping by the minimum. And at the time, my goal was just get rid of this debt. Like, I wanted to be able to kind of start my life over again. I couldn't go to school because I couldn't afford, to have additional loans. I couldn't stop working because I had to pay this debt, and I couldn't go to school if I was working. So this is the whole thing. So if you talk to me, what do you think your advice to me would have been?
I've always, when we talk to consumers, it's really what the consumer feels is in their best interest,
Okay.
right? Because we can never tell someone you should go file bankruptcy, you should
Okay.
go file debt settlement. Normally, that's why we do the budget to see where they're at financially.
Hmm.
So if it's something where the debt management plan just does not work, we're going to say, have you thought of looking into bankruptcy or settlement as an option?
Okay.
And in some cases, settlement may not even be the option because you still need to make a payment there as well. So if it's something where there's just that's the settlement or even DMP is not the option, then we'll say, hey, have you thought of looking into bankruptcy? And then we
Okay.
try to tell them, to go get professional advice.
What percentage of the time when you talk to somebody, and this can totally be a guess, would you say that it ends up being that they're a better fit for bankruptcy than debt management?
Mm, That's really tough. I'm gonna probably say maybe 20 to 30%.
Okay, interesting. Yeah, it sounds about right. I
Around,
think your instinct is probably about right for the market averages. So not a trick question, but you passed.
yeah.
If you um, if you if you think about the state, like the mental state that people are in when they're considering their debt. I think back to where I was when I was in debt, and there was a lot of just like shame and anxiety, like a lot of like, oh man, like I did this to myself. How did I get here? I should have been able to get myself out if I had just worked a little bit harder. What do you think about that when you're talking to somebody struggling with debt, and how do you typically address that? Because I imagine that's got to be a really hard barrier to get over.
Yeah, if it's that's what we try to do as
Mhm.
counselors, is we're trying to be relatable to the consumer and understand their situation,
Sure.
not judgmental. Be empathetic towards their situation.
Yeah.
and really just try to get a true understanding and just do our best that we can to try to have a conversation to see where we can help them.
Hmm.
And
What's
hopefully it goes in that positive direction.
what do you typically see from people who enroll in a debt management plan? Like you've been on for 25 years, so you've seen like the before and after. What's somebody's life usually look like, 5 years down the road when their plan is done?
Yeah, I mean, from what are the studies that we've done, I mean, we have an 80% success rate when they
Okay,
enroll.
great.
So,
Meaning
um,
I'm 80%, I'm gonna finish this plan.
correct. Yep. It's I would say I don't get a lot of the back end that they've completed. So I just know from some of the friends that I'd helped
Mhm.
that the burden was unbelievable
Sure.
because they eliminated their debt in less than 5 years. Whereas if they
Mm,
kept making those minimum payments, it could have been
yeah.
15 years or longer.
Yeah. Yeah, no, I think a lot of times what I've heard from people, and I'm curious if it's something you hear as well, is it actually gets easier to make good financial decisions when their debt stress is lower from being on a debt management plan or a bankruptcy. And so where you might not have felt like you could save money at all before, you're in this thing that really like your life isn't all that much different. Like you're in the same position, but now you can save and like you're doing a better job with your money. And I'm curious if that's something you often see as well, that people start kind of like what's the word? They almost like catch the finance bug where they want to, do a better job budgeting and kind of holding to those things.
Absolutely. And that's another thing that we try to, really try to add on to the consumer as they're enrolling in our plan
Mhm.
is to try to be proactive as they're moving forward through this process is to,
Mhm.
probably one of the biggest takes that I say for consumers is to journalize their spending. That's the
Mm.
biggest
What
thing.
does that mean?
Track and journalize their spending because,
Okay.
if you do a budget and you're getting numbers off the top of your head, they may not be 100% accurate, right?
Yeah. Yeah.
Groceries is a big one, right? That's
Okay.
probably the biggest expense where every time I talk to a consumer, they go, "I don't know."
Yeah. I'm not even sure I could
Um,
tell you what I spent on groceries if I
right,
didn't have like rocket money.
right.
Yeah.
So we try to. That's one recommendation that I really give, and we all give as counselors, is to track that spending and
Okay.
confirm. Because once you confirm that spending, that's where now you can, even once you're done with this plan, whether you file bankruptcy, whether you go into a DMP, when you're done with that debt, but if you can continue to track the spending, now you'll know how much you truly can save moving forward.
Gotcha.
And then that opens up all the positive things too that they may
Yeah.
want to do, invest
Yeah.
or
You can make your now that you kind of understand your money, like you can start
right.
making it work for you. And I think people don't realize, like, money is actually, like, fairly easy. Like, you just have to, like, not be afraid of it. You have to not be, every time you look at it thinking about debt collectors and just stop and, be smart with it and let it work for you, and it's really cool when you start seeing people be successful with it.
Absolutely.
Um,
It's a
alright,
great
I've got
feeling.
some other it totally is. Got some other questions coming in. So, I think this is a big one. So, I'm enrolled in a debt management plan. Can I still use my credit cards after enrolling?
No, fortunately, yeah, the
Okay.
cards that are enrolled, they're closed,
Okay.
but they can reapply. So they can reapply for, they can still apply for credit. We typically don't recommend doing it while they're on the plan because the goal is to get out of debt, but they can still apply for credit throughout the process. Um, and then when they're done, again, if they're looking to apply for credit cards, they still can.
Mhm. Do people usually have, like, a harder time getting credit cards after their debt management plan is over, or is at that point, is it your credit's kinda boosted back up?
Yeah, in some cases, it may even be easier for some folks.
Okay,
Yeah,
interesting. Yeah, it makes sense. You don't have bad debt on there anymore.
you have no more debt, right? Yep.
Yeah. So, we get this question a lot with bankruptcy, right? Like, can I do this with my spouse, or do I need to do it on my own? How does a spouse being on your credit lines impact your ability to be on a debt management plan?
It doesn't. So,
Okay.
because there's some couples that do it together, their budget, and some keep it separate. But
Mhm,
either way, if they want to just do the spouse only,
mhm.
one spouse and the other's off, they can.
Okay.
Yeah. The only thing that we would look at is if they have a joint account and they put that on, that card's going to be
Mhm.
closed.
Okay.
So they may want to maybe leave that off.
Got it. Okay. Now, I think you mentioned the after debt management plan thing, but am I able to open new accounts while I'm on a debt management plan?
Not recommended. We
Okay.
just don't want them to overextend themselves while they're
Yeah, yeah.
in the plan. But if they needed to for finance a car or something, they
Mhm.
can. Sure.
Okay, got it. So you mentioned fees earlier. We've got a question here about fees. The fees can they be waived, right? If I'm experiencing financial hardship, or if I imagine some people are below, 200% federal poverty, where there's often waivers for different types of things. Is this something that you all sometimes do as well?
We do. Yep.
Okay, gotcha, gotcha. All right, so let's see. I think I'm going to take a look over at Instagram, see if we've got anything coming through there. If people want to start this process with you all, Henry,
Mhm.
what should they do?
You mean as far as once they make that first phone call?
Well, no. So if they're listening to this webinar now and they
Hmm.
want to get in touch with Cambridge, they want to see if they're eligible, things like that.
Yeah.
Obviously, I threw your guys' website up here. What should they
Perfect.
do
That's
here?
it. Right there. Yeah. So
Okay.
they can click on the free quote,
Okay.
and the one of our reps will create just a small profile of their name and number,
Okay.
and then a counsel will reach out to them, and we can
So,
talk to
so
them
you're
right
going to
away.
call me if I put my info in here.
Exactly. Yep.
Got it.
And
What
we'll
what
call
happens if
them
I'm a
right away.
what happens if I'm the proactive type and I want to call you guys directly? Is it sort of the same experience? I'm
Same
talking to
thing.
Henry all of a sudden.
That's correct. Yep.
I love that.
Well,
Very
yeah.
cool.
So some you may get a live rep. Excuse me. You'll get a live rep that can forward you to us, or you may even get me directly or another
Okay.
counselor directly. Yep.
Got it. And how many people do you have working there? Like, is it just you and 3 other people just doing yeoman's work, or do you guys have a
Uh,
big operation there?
we have a little over 20 counselors, 21
Okay.
counselors, just for credit counseling. We also have housing division, student loan division as well, not counting
Oh,
our customer
ooh,
care
you
team as
you
well.
you said the magic word, housing and also student loans, 2 things
Yes,
that I know are really stressful for people when it comes to debt. So, obviously, I can't put those things into my debt management plan, right?
correct.
Okay, so what are you doing with those then?
So we have a separate division.
Okay,
If someone is looking for help, we do help with the federal student loans. So we do have a department that if somebody had federal student loan help, excuse
okay,
me, student loan debt that they need help with, we could get them over to um, a counselor that handles strictly student loans.
okay.
Same thing.
And
Same thing for housing.
I mean, when you say handle, what does that mean? Like, is this something you can get rid of the student loans? Is it kinda getting enrolled in repayment plans? How does that work?
Yeah, so that's where they would, if it's federal student loans, they could see where they're currently at if they're on any current repayment plans. I know a lot has changed in the student loan division, with the student loan repayments of
Yeah,
late. So that's a little bit out of my area.
okay,
But yeah, we could get you over to one of the student loan representatives, and they could, go over everything with them as far as what
gotcha.
additional plans are available, and and there is, and we also can help if they wanted to enroll in some kind of a repayment plan with their provider.
Okay, got it. Alright, I love this question because this is somebody who is really, really eager to get out of debt. Is it possible for me to pay off a debt management plan early?
Absolutely, no
Okay.
penalties either.
What would that look like?
They would just, let's say they wanted to send an extra whatever, 200 a month, or they want to send a lump sum. They
Okay,
just give us a call and we'll tell them the best way to do it. Yeah, not a
okay,
problem at
got
all.
it. Now, this one I think is an important distinction for when it's sometimes maybe better to consider filing bankruptcy versus when a debt management plan makes sense. And I'm curious what you think of this. But what happens if I miss a payment? I'm really really tight on this. I'm not sure if I can make them. I miss them. What's going to happen?
It's all depends on the creditor.
Okay.
Some of the creditors will not charge a late fee. In some cases,
Okay.
it may be a late fee like they were, paying on their own.
Okay.
So it just depends on the creditor.
Okay.
We always tell them if any issues like that, just to call our customer care team, and they could give
Okay.
the best advice.
So obviously, we're in uncertain times economically. Things can happen. Maybe I lose my job. Maybe my rent goes way up. Now it's really tricky for me to make these payments. And I call you, right? Because I imagine I'm talking to you sort of ongoing as I'm working on this, right?
Hmm. Correct.
Okay. So I call you and I'm like, Henry, like, it's not going to happen for me anymore, right? Like, I was paying $200 a month. Now I'm negative $500 a month because I have all of these additional expenses and I'm not making as much money. What is that conversation going to sound like?
Okay, so I'm sorry, I kind of misunderstood. So, yeah, so once you're officially enrolled,
Yeah.
our customer care team then handles everything for our
Okay. Got it.
clients.
Got it.
Yeah, so if they got to that point where they were like, okay, hey, they would speak to a rep and things
Mhm.
are changing
Mhm.
quite a bit, then if they have to leave the program, they can. They can stop the
Okay.
program at any time. They're not locked into anything.
So maybe I can decide I wanna do this at the start, and then, things go south as sometimes they do, and now I'm at a
Mhm.
point where I might wanna file bankruptcy. That's something I can still do?
Correct.
Gotcha. Yeah, that's really good to know because if I think about where I was when I was really struggling with debt, I knew about bankruptcy, but for me, I was like, I got to take responsibility for this debt on my own first. And I thought that it was sort of like a one and done thing. I didn't realize like, oh, I could maybe try this over here first, and then if that doesn't work for me, I can go file bankruptcy. So it is good to know that I have options there.
Yes.
Well, Henry, thank you so much for your time. I really appreciate it. Before we close out, what is one piece of advice you think is the most important thing for people who are considering debt management or bankruptcy or settlement to remember?
I think so. There's a couple things I would look
Mhm.
at or I would recommend is that so many times people are unsure.
Hmm.
They don't know they're not sure what to do and they
Yeah.
may wait. And you know what? Give us a call because
Hmm.
we're the first step. Give us a call. We can do a free evaluation. There's no charge for the evaluation. And at least they get an understanding of what their options are. So, because I've had consumers call me a year later and say, I should have at least called you first. I didn't realize it because it really is very easy. It's not a very lengthy call. Again, unless the consumer has questions, which is fine, we'll take as much time as needed. But at least if you make that call, I know sometimes it could be hard, but we could really at least give them the best advice possible, and at least it allows them. And what other consumers have told us is that it did relieve a little stress that they
Yeah.
did make that call to where at least they can move forward somewhere.
Hmm. Yeah. I feel like half the battle just saying it out loud, saying like, I'm struggling, like, what are my options?
Yeah,
Really puts you in a much better spot to move forward. I
yeah,
love that.
and I think the other thing too is really confirming what you spend. I
Hmm.
think that's the probably the next thing is to really confirm what you
Sure.
if you can. It's tough to just with everyday life to
Yeah.
track your spending.
Track it.
It's tough
Yeah.
to do that, right? So however you can, some people will do it by writing it down. Some use the apps. So whatever they can find that's the easiest tool, I think that'll really help in seeing where they're at financially to where that'll help them make a decision as they move forward.
I love that. Well, if that is you and you're listening tonight, if you're saying, I really just need some guidance or help, Cambridge can be a great option. I've got their website up on the screen here. It'll also be in the show notes. And I just want to say thank you for taking time out of your Monday night to join us. Henry, obviously, thank you to you for your expertise. It was awesome having you. And if you are watching the show, maybe you're watching it live or you're watching it after the fact recorded, I would just encourage you to think about your debt, think about the debt that you're trying to help somebody else with, not as shameful, but as the first step of moving forward financially. Getting out of that debt, whether it's through a debt management, settlement, or bankruptcy, can really be the start of your life, even when it feels like the end of it. So if you like this video, if you found it helpful, be sure to subscribe. We do webinars like this every Monday night. You can also follow us on social media for more tips and expert advice about managing debt. Thanks again, and we will see you again next Monday. Take care, everybody.
Thanks for having me, Ben. Take care.
Of course.